year. Of course, the bigger story is the consumer price index out tomorrow. Federal Reserve Vice Chairman Philip Jefferson said that the central bank should hold steady on monetary policy until it's clear that inflation is closer to the 2% target. Despite a healthy economy, he said. The New York Fed's latest survey finds Americans expect high inflation to be around, though, stick around, Leo. And that's what we've seen from January, February, and March. What are your expectations for the CPI number tomorrow and the PPI today?
I think if there's a surprise, it'll be most likely to the upside, Maria. I've been on the show quite a few times talking about inflation is going to be more persistent than people think. The risk of rate increase is probably as great right now as a cut. And that's because we still have the same problem. There's too much federal spending. There's too much money in the system after the Fed grew money supply by 40% post-COVID, and we haven't fixed the core problem. And what I find fascinating is I was stunned when I heard folks say we're going to have 6 rate cuts last year. We were on the other camp that there was most likely a rate increase. How is that possible when we're seeing asset prices at all-time highs? And the Fed's language this week has been consistent with their language for the last 12, 18 months. We have to fight inflation, top priority, and we've got to bring it down. And the only way to bring it down, Maria, is slow the economy. So I think this consumer is feeling the pain of higher prices, and they're starting to feel this slowdown a little bit.
Yeah, what about the idea that we haven't even seen the full impact of the 11 rate hikes that the Fed has engineered in the last year and a half? Right. I mean, there's that. I mean, well, Mike, yeah, go ahead, Leo.
Yeah, I was going to say, I mean, what the Fed's trying to do is fly an airplane through the eye of a needle, right? They want to increase rates just enough to keep the economy going and slow down inflation. And that's going to be very, very difficult. We're starting to see the signals, right? We've talked about it, the delinquencies in credit cards, delinquencies in subprime car loans, et cetera, et cetera. So I think the Fed's got a tough job. But I unlike most people who are just rooting for lower rates, I think the Fed knows it has to slow its economy down, even at the risk of inflation, to get this inflation under control.
Well, there's a new Bloomberg Markets survey finding more than 30% see tech stocks like NVIDIA as a possible hedge against inflation, Mike. 46% say that gold is the best safeguard against rising prices, but NVIDIA is there, too. NVIDIA reports earnings next week. Mike, I know you like both NVIDIA and you like gold. What's your reaction to this survey, and what do you want to do as an investor? Let's say you hold NVIDIA. You've enjoyed all these gains in the last 2 years. Now you're going into, Judgment Day earnings for the quarter on the 22nd. What happens? What do you do ahead of those earnings?
Yeah, well, look, I think if you're long NVIDIA, you stay long, because I think this technology upgrade cycle for artificial intelligence and upgrading all the data centers to these next generation GPUs offered by NVIDIA and AMD and Marvel have so much more processing power that if you're not upgrading your data centers, you're going to be left in the dust by your competitors. And in terms of tech stocks as an inflation hedge, they're a spectacular inflation hedge. Over the last 20 years, the money supply is up 3.5 times. The price of gold has moved similar to that. However, tech stocks are up 10x when you look at the QQQs. And over the last 10 years, tech stocks are up 470%, even though the money supply has doubled. Gold is only up 75%. So the whole point of owning stocks in the long run is to beat inflation, is to have an excess return above inflation. And I think tech stocks, given their ability to change the world, the ability to have companies like NVIDIA that will double and triple their revenue year over year, in these unique situations, does provide for a lot of opportunity. However, owning some gold to lower the volatility of your portfolio is always a good idea, too. And I think we're at the beginning of a multi-year bull market for gold at the moment.
Is there another group that offers the kind of growth that tech companies do?
Not even close. Not even close.
Okay.
Well, Maria, one thing I think it's ironic that we talked about Cisco today. Yeah. And while tech stocks do hedge inflation, one word of caution: Cisco was NVIDIA. So you do have to mind valuation. Cisco was the center of the internet and center of the universe, and it hasn't made a new high since 2000. So I do think investors have to mind valuations.
Yeah, in the Go-Go's, the Go-Go 90s, it was all about Cisco and .com. You're right. We needed the wiring for that .com growth. Leo, great point. Thank you for that. Mike, you're with us all morning. We appreciate that. Gentlemen, thank you.